I'm Matt Bishard here in Los Angeles for REIT World 2019, NAREIT's annual conference. Joining me today is Jay Whitehurst, the President and CEO with National Retail Properties. Jay, thanks so much for joining us.
Great to be here, Matt. Thanks.
Now, your company has more than 3,000 properties across 48 states. Can you talk about some of your best geographic markets right now and why they've been so successful?
Yeah. First, let me say our portfolio is very healthy. Our long-term occupancy rate is around 98%, and right now we're running at about 99% occupied. And what's more important to us than specific geographic locations is getting good, well-located retail sites along high-traffic roads leased to strong operators engaged in e-commerce resistant businesses. So that's the real focus for us. Our tenants are large regional and national operators, and they are following population growth as they grow their stores. And so that takes us to the population growth areas in the Sun Belt and the Southwest, Mid-Atlantic, and up through the Midwest. So that's where the preponderance of our portfolio is. One other point I'd like to make, a little bit in the weeds, but not only do we have this high occupancy rate, but we also have a very high lease renewal rate. At the end of the term of the lease, 85% of the time our tenants renew the lease and continue on. And this creates a very stable income stream that's a hallmark of National Retail Properties, and we think is superior to the more variable income streams that you get from other commercial real estate property types.
Right. And environmental practices are another key concern for National Retail Properties. How do you navigate these issues among the, say, gas stations, for example, in your portfolio, which can tend to have some unique environmental issues compared to other tenants?
Well, at our core, we are a real estate company, a retail real estate company. So we're very focused on the quality of the real estate parcels that make up our portfolio. Our underwriters go visit every property that we're thinking about buying, and we do a very thorough due diligence inspection of all our acquisitions, including environmental assessments of every property. We do business with large regional and national operators, and in the convenience store space in particular, some of our tenants are national and multinational companies like 7-Eleven and Circle K and Sunoco, as well as some very large national convenience store operators. So these are big companies with processes in place for their environmental risk. In the lease, we make it clear that it's the tenant's responsibility to take on all environmental compliance laws. The tenants maintain environmental insurance against that, and behind all of that, National Retail Properties maintains a backup insurance policy, but we've never had to make a claim on that. I will say that whether we're talking about convenience stores or fast food restaurants or any of the other property types that make up our portfolio, it's what we try to do, what we do succeed in doing is applying a very thorough due diligence process and do business with strong national and regional operators so that regardless of the risk, we're very safe from the net leased landlord point of view.
And finally, what types of retail relationships are you particularly focused on as we're heading into 2020?
Yeah. This is a little bit off point, but we have raised our dividend for 30 years in a row. I feel it's important to let that know to your viewers. So we're one of only 2 REITs and less than 90 public companies with that track record of raising their dividend for 30 years in a row. During that entire 30-year period, our focus has been on single-tenant net lease retail properties leased to strong regional and national operators on well-located parcels. And so we are continuing, 2020 and 2021 and beyond, will continue that focus of focusing on those regional operators that are engaged in e-commerce resistant businesses such as convenience stores, fast food restaurants, tire stores, car washes, the typical uses you see along high traffic roads when you're driving around America. You should expect to see us to continue to focus on that kind of quality real estate and with those kind of large regional and national tenants. And if we do that and marry it with the high occupancy rate that you asked about and that steady cash flow, we believe that we'll continue to deliver above average returns for our shareholders while taking below average risk.
Jay, thank you so much for joining us.
Great to be here. Thanks.
For more from REIT World 2019, be sure to visit NAREIT's website, REIT.com.